Shares are down, still down solidly so far this year, having a nice 6% jump today after 11% gain in the month of June. This is all based on optimism. He's got a deal for his compensation package that passed through shareholders. Let's bring in Caroline Wood, senior markets correspondent here. Caroline, I saw a note out earlier on Tesla where Wells Fargo keeps an underperform rating on a $120 price target, but puts it on a technical list. I think maybe that's part of it. You've got deliveries that are supposed to be due sometime this week also, right?
Hey there, Tom. Yes, taking a look at Tesla shares, they're up more than 6% today. So that summer rally is continuing, was up about 11% in June. So adding to that today, there are a few potential catalysts this summer that could really potentially give a boost to Tesla shares. The first being deliveries, which are out tomorrow, or they're expected to be out tomorrow morning. And then there's Tesla earnings due out later in July. And then, of course, the robotaxi launch, which is in early August. So that's really the key that the bulls are hanging their hats on in terms of a positive move higher in shares. But we're seeing a lot of optimism heading into the delivery numbers as well. Could also be kind of a little bit of crossover from the U.S. listed shares of Chinese EVs that are doing better today following signs of improvement in their June number. So we could be seeing Tesla getting a boost from that as well. In terms of the actual numbers that we're looking for Tesla tomorrow morning, consensus estimates calling for around 435,000, but the whisper number is for 420,000 EVs in the second quarter. Both are down from 466,000 in the second quarter a year ago. This would be the second consecutive decline. That 420,000 number would be about a 10% drop. But analysts are mixed heading into this report. Dan Ives, of course, we know is a perma bull on Tesla, overweight rating, $275 price target, $350 for 2025 for the bull case, said, we believe the China growth piece for Tesla is slowly turning around and saw a mini rebound in Q2, which would help Tesla come close to the street's 435,000 units estimate. He's seeing some signs of consumer EV demand stabilization. He says the lion's share of price cuts appear to be in the rearview mirror, and that the worst of the demand doldrums are in the rearview mirror as well, heading into the second half of the year. Other analysts are scaling back their estimates to even lower than that 420,000 whisper number. We saw RBC reduce estimates from 533,000 units to 410. Barclays cut their estimates from 444,000 to 415,000 units. And then you mentioned Wells Fargo, the tactical ideas lift, but maintaining that underperform rating and $120 price target, saying we remain concerned with recent moderating trends across all three regions, the U.S., EU, and China, and thinks shares will take a hit in the quarter as Tesla's strategy of boosting sales by slashing prices really kind of loses steam, saying few levers remain to increase volumes outside of pricing and model refreshes as the company has resorted to financing promotions with seemingly little effect. So definitely the bull and the bear case there. Bulls clearly winning out today, though. Shares up more than 6% right now. Still down about 15% year to date, but really chipping away at those losses.
Caroline, if you get up in the morning, open up your Thinkorswim platform, hit news feed, you see what you just mentioned, $120 price target on Tesla and from Wells Fargo. Cybertruck drivers list shortcomings, right? There's another completely negative story. And you keep going, and it's one negative story about either Elon Musk, about the car business, about trends. It's one thing after another, and the stock is up $12. So, how do you read this? How do you sift through this? Dan Ives can't be the only person putting out a note every morning, or that would be better. But how do you look at this and look at this barrage of bad news and the stock's up $12?
Well, I think they're all really focused on, the bulls at least, and Elon Musk are really focused on the fact that they look at Tesla as much more than a car company.
There it is.
And much more of an AI and robotics company. And I think that, we certainly know that Dan Ives thinks that. And so really the sights are set on that August 8th robotaxi self-driving event as the key catalyst that could drive Tesla shares higher. Because look, the expectation is that deliveries will fall, right? So, Elon Musk has called self-driving a $1 trillion opportunity. And it seems like the bulls are really trying to cash in on that. Dan Ives has said that it will be a key historical moment for the Tesla story that they see as a near-term catalyst. Adam Jonas over at Morgan Stanley. So Dan Ives isn't the only bull writing notes, because Adam Jonas over at Morgan Stanley has an even higher price target, 310 with a buy rating, saying our thesis on Tesla is that it's both an auto stock plus an energy, AI, robotics company. In fact, their valuation of the core auto business, $67 a share, represents just about 20% of their $310 price target. So I think that's really the key, is that those who are bullish on Tesla and are buying at these prices in terms of Tesla's valuation are looking at it as the AI and robotics company or energy company, as Adam Jonas also said. That being said, if you take a look at the breakdown, analysts have always been very mixed on Tesla. There's never been a clear consensus. 20 buys, 19 holds, 10 sells. Median price target is 180, so quite a bit lower, what's 16% lower than where it's currently trading right now.
Yeah, I think there's going to be a few catalysts coming over the next several weeks into that robo-taxi event in early August. All right, thanks to Caroline Wood, Senior Markets Correspondent here, helping us break down Tesla. Alex.